Welcome back. In today's topic, we're going to talk about liquidity. So, what is liquidity? Liquidity, in its simplest form, is just pending buy and sell orders rest in the marketplace. This will be in the form of buy orders, sell orders, as well as stop losses. Now, note that trading is a zero-sum game. Money is not created, but rather taken. It is taken from the losers and handed to the winners. The financial markets that we dabble in have $6 trillion in circulation each and every day, around $6 trillion. So it's in circulation. It's not being created, but it's rather being handed from one side to the other. And that's the whole essence of trading. For every win, there is a loser, right? So every time someone buys, there has to be someone willing to sell to that buyer. That's the way it works. And so liquidity is the magnet for price. Where liquidity is where price will gravitate towards. Buy side liquidity. This is buy stops resting above current market price, and sell side liquidity. This sell stops resting below the current market price. Now, where can you expect to find liquidity in the market? Well, buy side liquidity can be found above the swing highs. So if you look here, I marked out all the swing highs, or at least I marked some of the swing highs here, and above those particular swing highs will be resting buy side liquidity, and price is going to gravitate towards that liquidity because liquidity moves markets. Price moves as a result of liquidity. The fuel for price movement, the reason why price goes up or high, is liquidity. Where can you expect to find sell side liquidity? Below old lows. So below your swing lows, mark them out here. Below those lows will be resting sell side liquidity, and price will gravitate towards those levels. And you can also expect to find liquidity in this particular case, buy side liquidity above relatively equal highs. So relatively equal highs would appear to be resistances. So retail traders will sell at that particular point, but price would go above that level of resistance and take out the sell stops. The buy stops above that, and the stop losses as well, and then of course go the other way. And you can also expect to find sell side liquidity below relatively equal lows. Same can be seen as a support level, but price will not support price in the near future. Rather go for sell side liquidity. This can be double bottoms or triple bottoms. And here's an example. Relatively equal lows. So this lows here, they appear to be where price is finding support at. So retail traders are going to buy here. Price is not going to buy. Price is going to go for the stops below those lows. Here we have relatively equal highs. See how price went for that high, took out buy side liquidity, and went the other way. Now let's talk about stop hunts. A stop hunt basically when price goes to hunt, alright, or target the liquidity that is resting above old highs or resting below old lows. And so it has been going by different names. It could be liquidity run, or liquidity sieve, liquidity purge, but understand that if you see those different terminologies, they just mean the same thing, that just price is targeting liquidity resting above old highs or old lows, and then it takes them out and goes the other way, the opposite direction. And now I marked out the charts all the time that price has stop hunted the highs and lows. This is a daily time frame. Okay, recent price action of volatility 75. So we had high and high here. We have price taking up buy side liquidity, stop hunting this high, and then going down, creating those highs as it's going down, right? So, and then at a later point in time, we took out those highs, this buy side liquidity resting above them. Then we go the other way, take out sell side liquidity resting below here. Then we go the other way, buy side liquidity above here, buy side liquidity above here, buy side liquidity above here. Boom. Then price creates relatively equal lows, right? 1 to 3 times supports price, but what happens before price expands higher? Check out that sell side liquidity and expands higher. Now let's talk about some important liquidity levels. These are going to be very important levels for you to observe, okay, on an intraday basis, on a weekly basis, and on a monthly basis. Firstly, we have previous daily highs and or lows, okay. And as you see here in this particular point in time, I had that previous daily highs and lows marked out. On a downtrend, those previous daily lows was the drawn liquidity, was what price was seeking or targeting. And once price began a reversal going to the upside on an uptrend, those previous daily highs was the target for liquidity and what was pulling price higher. Then we have previous weekly highs, previous weekly lows. Right here, I've noted the weeks from Sunday to Sunday to Sunday to Sunday, right? The 7 days intervals, and so each high and low will be previous weekly high and low. So on this particular point in time, created high and low. On the next week, we targeted the previous weekly high. There's potent buy side liquidity resting above that, and this sell side liquidity resting below this previous weekly low. Then on the next week, you target that previous weekly low, you take out sell side liquidity, you go opposite direction, target out the buy side liquidity here and here. Then lastly, previous monthly highs and lows. For you to see this, of course, you have to have intervals. You have to, if you press on a daily time frame, and there's divisions here, monthly divisions. So this is June, this is July, and August, and September. So high of June, low of June. Then in July, we take out the low of June. Alright, then we go the opposite direction. In August, we have July high, July low, and also June high. Price, buy side liquidity. Targets those buy side liquidity above those highs and low. Those highs, I mean, and then reverse to a downtrend. Then on this particular month, we have high, and the low of the month is created just on the last day. Then, of course, in September, which is our current month right now, we took out the previous monthly low before going higher. Alright, so this has been a short introduction and very brief. I believe you understand, and see you in the next one.